All right, welcome. I'm not sure if there's anybody new to these sessions. If there is, great. If not, that's okay. What we'll do today is, again, just continue to focus on the strategy that we talk about in all our sessions here, which is using our strategy to figure out where prices are going to turn and where they are going to go. For that, we need to identify price levels in any and all of these markets and any and all of these time frames where supply and demand is out of balance. That's where prices turn. So we need to find those key supply and demand zones where banks and financial institutions are big buyers and big sellers. Not that have bought already, but are big, have buy orders and sell orders. What do those footprints, those pictures look like on a price chart? That's where prices turn. Then we need to also identify in price charts where those levels are not. Where those levels are not are the profit zones. So key supply and demand zones with that are far apart from each other. That's our goal. As always, I have a list of markets. As always, I've got a list of markets over here on the right that I typically go through. Usually go through some of the big ones. And but if you have any markets you want to look at or trading ideas you're thinking about and you want me to look at, just type them in the chat and we'll take a look. All right. Let's take a look at our CL. Let's start there. Yeah, again, if there's any markets you're looking at or you want me to look at, just type them in the chat. Now we'll start with CL. So here we have a supply zone on the daily chart. I don't know if any of you are still in this trade. This is one of our FX3 levels. We were looking to get short up here, right at the 47.50 area, for a much bigger move to the downside, back to the low 40s, if not upper 30s. If you're not in that trade, then let's look for some areas where we can possibly re-enter that trade. Does anybody here trade oil? Any oil traders here? One of the areas we would look at is this key rally base drop supply zone right here. But again, it's more important to just stick to the bigger picture trade that we're in here. Okay. Let's go to some FX markets. The other big one was this Aussie dollar. So this one is right back up to the entry point. Anybody take this one? We pointed this one out also in FX3. Just move this a touch. Right, so that's the 79.60 area, and we have 2 or 3 levels on top of each other. Price hit that level, started to fall back up there again now. We're looking for a move to the downside, at least to the 77.50 area. From there, we'd expect to bounce higher, but we'll reassess see if there's any new supply coming into the market. Does that make sense? Let's move to some other markets, but let's first look at the dollar. We always want to revisit the dollar and what's going on here. So the dollar just continues to drop and make its way down to our target of 92 from 103.40. There are, it looks like in the big picture this is really low on the supply-demand curve and all that, but this is really, there's the chart is suggesting there's quite a bit more room here because you have new supply zones that are not that far from current price. So even if you got a rally in the dollar, still likely to head lower. Okay. So having said that, let's now look at some other FX markets. Here's the yen, also from our FX Street session. Just looking at a daily chart, just moving from one level to the next. And remember, this one was a good lesson because, like we said, this will probably do what we expect it to do, which it did. But it doesn't mean there's a trading opportunity there. This was a great example of having two nice, really good supply zones on a chart, but they're just too close to each other, right? Your risk reward is not ideal. Okay. So what we'd look to do now is let's see if if the market could take out all this demand, which it almost has. We now have the next trade in the yen is probably the one we want to take. Okay. So again, great opportunity or a great example of how you're right in your decision-making process, but there's just not anything to do. Your risk reward is completely out of line. Does that make sense? But this next one looks like the one that we actually want to take. So this is the yen, looking right around 112 for a bigger move to the downside here. Now, I know we'll need the dollar to rally for something like that to happen. But don't forget, as the dollar gets closer to that 92 and further from the supply above, the more that's likely to happen. Okay. Anybody trading this market here, the yen? We don't need these levels in here anymore. Again, great example of this market did exactly what we thought it was going to do, but not an opportunity we want to take. All right, so watch that 112. And there you go. Any questions, comments as we go through all these markets? Okay. Yeah, if you have any, just throw them in the chat. All right, let's keep going. The euro, continues to move further and further away from our demand, obviously with the dollar falling. Where is that likely to stop? 106.90s. Yeah, let me go back to the yen real quick. Yes. So let's look on a 4-hour. Yeah, 106.90s looks great. And I think you're saying that because that's before this demand down here. Yeah, exactly. So if you look at the euro up here, obviously we're coming into some, it's been rallying because we've had, all this to come into. None of this is supply. None of this stuff in here is supply, right? But we are going to run into some supply around the 117.80 mark. So a little bit higher from where we're at right now. Yeah, just above that. But again, it's your demand's going to be a little too close at this 117.80 your demand is going to be a little too close, so we probably want to wait for the higher one. And again, a lot of this, you really want to wait for that dollar to hit that, get closer to that 92 before we, bet against the euro. Does that make sense? The Aussie dollar we looked at, we've got a nice one going there. The Canadian, let's take a look at the Canadian. The Canadian, the one to really watch here is, and it's not super close, but just below, a lot of people are going to be eyeing this pivot low and probably putting on some bets here. Just because the last time we were there, we moved up from there for, many, many months, over a year actually, right? But the real level sitting just below that, that's the key. So, watch when the Canadian dollar gets below the 124.60 area here. Okay. A lot of people will be watching that, obviously, and then, but the key level sitting just below it. Great levels in the Canadian dollar. Let's move on. Let's go to some other markets that are obviously tied to these currencies. Like we started with oil. But let's take a look at gold. And let's do that here. So here's gold. I'm just going to pop up this chart right now. You can see we're sitting in this level. I believe this is from our last FX Street session. Maybe from actually last Friday. But anyway, we're sitting up in this level now. We've got a level below. Little trading opportunity here. Looks like you can risk one to go for maybe 3. That's about it. But then the real play here is to buy the pullback to demand for a move up to this level here. Does that make sense? Okay. Let's see. Yeah, we can look back at the euro. An interesting question I have is, let's go over this first, and then we'll get to that. Let's look on the 4-hour. No, I mean, when you turn up there, especially if you come down to the 4-hour, I'd be looking below 115. You don't really start to hit any kind of even remotely significant demand until you get below 115. One thing I would ask here to the group is, are most people, day trading the FX markets, or call it swing trading the FX markets? Let's see. Got it. Okay, great. That's good. In the past, many people would say, the majority of people would say day trading the FX market, which, in my opinion, is not the right thing to do because, number one, well, I think you guys all get the point. Since you just have to be careful. You'll see, the FX markets, especially through the spot markets, which is what I assume most of you are trading, are a challenge when it comes to day trading because of the spread and all that. I think everybody knows about that. The second thing is, even if they weren't a challenge day trading, the opportunity, playing in the bigger time frames is just so much greater, right? Getting into those big levels for those key moves. Yeah, Richard, it'd be great if it was, and it may be going in that direction, but yes, it's like why? And it's what kind of life is that sitting in front of the computer all day when you can get into these bigger moves? I mean, look at your daily, weekly, even 4-hour charts of all your FX markets, your futures markets. I mean, there's just so much opportunity there, right? See what I'm saying? Okay, next market. I can pick it, or you can. Up to you. If you leave it up to me, I'm going to choose the S&P. And we'll just take a quick look. Let's look at the S&P. So bigger picture, not a whole lot to look at there. It's up. When I come down to this 4-hour chart, though, first of all, look at this real quick. See this supply zone right here? How well it worked this morning or the last couple mornings? That's a sign. And again, don't think too deep. The fact that this supply zone right here held nicely tells us that we're at a price level, at least right now, where supply exceeds demand, right? Can there be any other interpretation from that? No, right? So when we look at that, take that thought into this chart right here. Notice prices dropped. They attempted to come back to the highs, didn't, couldn't, and now we're just basing sideways. If we do get a move down in this market, we'll be left with a really quality supply zone up here. So we can do one of two things. We can find a place to, short inside this zone and keep the risk small by, putting that buy stop order just above the zone while we're in it. And that would be, a safer way to play a breakout type trade if the S&P does fall. The second thing we could do is just let price come down, fill some of these orders sitting at 59.60, and then rally back up for a lower risk short entry. Let's see, do you ever foresee U.S. traders having access to CFD market in the near future? Yeah, regulation is, at least here in the U.S., is it's getting better. It had a period, quite a long period, not long ago, of just getting worse and worse and worse. Now it's moving, it seems like it's going to be moving in the right direction again. So we'll see what happens. But look, there's plenty of markets to trade. More than enough opportunity. Let me make this a 60-minute chart. Hang on a second. So take a look where silver is. If any of you trade silver, not that it's necessarily going to fall from here, but there is a level just a bit higher. I don't know if anybody here trades silver. The point here is we do have a quality level sitting just a little bit higher. And remember, a rally-based rally, drop-based drop, those are types of supply and demand levels that are found in the middle of moves. Prices typically, more often than not, turn at your rally-based drop and drop-based rally. Okay, so what's nice about this one up here is it has that rally-based drop sitting just on top of it. Okay? And my main point was going to be the nice big profit zone below. Let's get back to a couple forex markets here. Let's look at the euro yen. Let's see what this was. All right. Let me get this profit zone line out of here. And let's focus on this area up here. I remember we had demand zones down here. So this is a good example of a drop-based rally with a little rally-based rally coming out of it. But now we're coming into this stuff right here. And the likelihood is you're going to see prices, let's get the top of that. So let's get the top of the rally-based drop and part of this drop-based drop right here. Okay, so now I have three levels inside my level. It doesn't mean we want to take one trade with all this risk or anything like that. But just to focus on that area, because there is room for a drop back to those demand zones. Okay, let's move on. Yeah, we can look back at the Aussie dollar. $81, let's take a look. So you're saying all the way up there. Let's look back. See what we have here. So you're talking about up here, kind of the top of the pivot? Right. Got it. Yeah. So, yeah, this is the area price has been turning at in the last few days, down in here. The meat of this level is a little bit higher. I'm going to put a second line in there, so we'll have like 3 lines in this zone, just so we can see where the real meat of this comes up. I don't think we hit that yet. Let's check. No, not yet. So that middle line is a way to take advantage of this opportunity and cut your risk literally in half. Okay? Well, we don't know if it's going to get up there. If it's a good level, it won't get up there. But let's see how it goes. And I think the level you're pointing to is the rally-based drop all the way up here. Again, great area. Everything about it looks really good. We don't know if price is going to get up there. At least anytime soon. Yeah, you would be targeting your targets in the chat there seem very appropriate. Yeah, the weekly again. Just let's see here. Well, let me go back. Yeah, and on the weekly, the new larger time frame, curve is now set for Aussie dollar. That. Okay, so that's what the weekly supply-demand curve looks like for the Aussie dollar. This is likely to, stay intact. Very likely for the next probably year or so. Maybe not. Maybe that's looking too far out, but certainly 6 months. Okay. So we'd want to just, with anything, you have to have that longer time, like a longer term view. Oh, here's another market that we've been watching very closely and always do. And it's bonds, it's interest rates, it's U.S. interest rates. Okay. Would suggest that this level is, you're up here again now, but even though it looks like you have a level here, prices have been back to this level so many times and gone so deep into the level, there's probably not much supply left up in this area. So we'd be looking for a decline to some demand and then a move higher through this area, possibly, all the way back up to here, but we'll see. A lot of what happens in this market hinges on what happens or doesn't happen in Washington. So the chart is suggesting, here was the election. Here was the low. So the chart is suggesting that you're, maybe 60-40 going to get, some good economic stimulus, some with taxes, and we'll see. I mean, we're already seeing the benefits of some things, but the market was pricing in a lot more. So the market has taken back a portion of that right now. So we'll see what happens. But keep an eye on these levels. They're key. Yeah, we could take a look at Aussie yen. There it is. Yeah, let's look. Let's go 4 hour. Okay. Yeah, the Aussie yen has some demand zones below. No reason to think that pullbacks to those levels are not viable pullbacks. So you're talking right here around 87, but you're with a stop just below 86.45, and that would be for a move back up to the highs and higher. The goal here is to look to get in for a move that possibly takes price back up to the 91.5 range. See this level here? Nothing really to stop this rally until you get there. That's where we would expect this multi-month uptrend to stop and a move down to begin. Any other markets you want me to look at? If you can think of any, great. If not, that's okay. All right. Well, there's my email address. Hopefully that was helpful. Seiden@tradingacademy.com. Again, always just try to come to these with any trading ideas you want. I'll always have some for you. I think we have some good ones. They're just bigger picture setups that need a little time to get going. If you're in that Aussie dollar, great. Just stick with it. And the crude oil too. That's another one that's going for us. And we'll see you next time.